All right, welcome back, everybody. I'm Larry Kudlow. I'm here with Michelle Caruso-Cabrera and our all-star market panel. Michelle, you may have some very interesting news.
NHK, according to the wire, is reporting that a helicopter has been seen pouring water on the Daiichi reactor. So let's see if that means that maybe the radiation levels have come down. They can get in there and actually start working on cooling that reactor.
This is a good rumor or a good fact. Yep. We've had so many bad rumors and bad facts today, and loose lips sunk a lot of stock market ships. But let me move on. I want to go to my friend Brett Ahrens. Brett, we've been talking about high degree of caution, ultra caution. I can't emphasize enough. No, Brett is there. All right, they'll go to Brian Kelly. I want to ask you, what is wrong with investing in the United States, Brian Kelly?
Nothing's wrong with investing in the United States. I think we know more about what's going on in the U.S. than we do in Japan. You made a very good point earlier, Larry. We have absolutely no idea what the outcome is going to be here. There's probably 50 people on this planet that actually know what's going on, and those are the heroes that volunteered to stay behind and pour water on this plant. I'm not one of those people, so I don't see how you can invest in Japan at this point in time.
So consequently, just as a follow-up, Brian, because I love your work and you have a great track record, does investing in the United States make better sense? And I say that not to be clever, but obviously people here are very worried about the Japanese disaster, the potential additional nuclear disaster, and the potential additional radiation disaster. In other words, are the markets trading in sync, Brian, or is it just better off to be in America where, as you said a moment ago, we actually know stuff?
Well, it is probably better off to have money in America at this point. However, we do know that there will be some kind of global economic hit because of this tragedy. We don't know the magnitude of it. So I'm not sure that the U.S. market is actually a bargain at this point. I actually happen to be short the U.S. market prior to this incident and remain short the market.
Ron, what is happening in Japan is so horrific and very sad. At the same time, if they lose production capacity, do we end up picking it up?
Well, I think, by default, there's plenty of spare capacity in the U.S. manufacturing sector, whether it's in the auto business or other heavy manufacturing. China doesn't produce the same type of goods necessarily as Japan. Germany does. So there is some spare capacity. And by default, people keep referring to the U.S. as the best house in a bad neighborhood. I think we're a little better off than that. When you look around the globe today, and my theme all this year has been, there's no place like home. And this, even with this tragedy, however horrific it is, it points to the fact that the U.S. is in much better shape politically and economically than almost any other place on the planet right now, and still, in my mind, the best bet if you're going to look at this from an investment perspective.
Michael Thorpe, bring it back in, Michael. You heard what Ron and Sana had said. You heard my colloquy with Brian Kelly. Where do you come out? Is it an American stock market play, or is it just a cash play?
Well, once again, I rarely disagree with Ron, but I think there's a real danger here, Larry, and I think that some of us, on TV are a bit guilty of trying to come up with too easy, too pat a solution. We've got a problem in Japan. Should I buy it or should I sell it? It's very difficult for us to really kind of step back and say, we don't know. We really don't know, and we can't give you a clear answer. We don't have one yet, and as other guests have been saying tonight, we're not on the ground. We don't know what's going on. I think it's remarkable that our markets have actually responded in such an orderly way. I mean, we have. If I had told you, Larry, at the beginning of the year that you were going to see oil go up over 100, that we were going to have a 9 on the scale earthquake, that we were going to have a tsunami, near nuclear disaster in Asia, we were going to have everything in the Middle East and North Africa, and how much would you expect our markets, down from the high? Probably 2 or 3% would not be the answer. So it's a tumultuous time, and I think you have to proceed with really considerable caution.
David Kochok, weigh in here on what people should be doing at this point as they watch.
Domestic U.S. natural gas, the rest of the energy sector. John Kudlow is the expert in the panel. Maintain some cash reserves, dry powder, don't commit it here. Avoid Japan. Remember, this is the third largest economy in the world with a major shock that will put it in substantial recession. And expect the Bank of Japan at some point to intervene massively, buy assets, buy currency, because they have to do it. They've got to eventually devalue the dollar. They must, the yen, not the dollar. They must do it.
Jimmy Rogers, I want to ask you, you asked the question rhetorically, I want to get your answer. Regarding cash, where would you put cash and what would your investment strategy be, Jimmy?
Well,
Larry, the last couple of times, including last night, I told you I am long commodities, which happen to be going up. I am short emerging markets, which are going down. I'm short U.S. Technology stocks, and I'm long currencies, including the Japanese yen.
Jimmy, I'm sorry to interrupt you, but we want to bring the live pictures that are coming to us out of Japan from NHK, the television in Japan, helicopters pouring water on the reactor. I am told from the control room that we have video of it. I have difficulty figuring out exactly what this is at this point, but we're going to keep this up on the screen. Water spraying operations as they try to cool the reactor there and somehow bring this crisis under control. Jimmy, finish your thought as we watch this.
No, I more or less did. And so the last thing I said, I own some currencies, mainly the yen. I do own a few U.S. dollars because it's been so pounded down. But that's how I'm playing. And the people who keep saying do nothing, I would remind you that in investment, well, if you do nothing, you're doing something because you're maintaining what you've got, and that's not necessarily a good thing to do.
John Kudlow, can you just take us through, the energy business. This is what the utility company is doing. They've plugged back into this nuclear reactor. It looks like the water is going to come in and try to cool down the overheated nuclear rods or maybe avert a disaster, John. Is this a good thing? How good a thing is this? Why wasn't this done sooner?
Well, Larry, it wasn't done sooner because radiation levels continue to spike because there's speculation. This is one thing we definitely do not know, is whether or not that the core has lost all its water, that the rods are dry and are emitting tremendous radiation. That's what the speculation was out of our own U.S. officials, warning and urging U.S. citizens to evacuate to a much greater degree than the Japanese officials have. The more disturbing thing is, though, is that these reactors are supposed to be within a vessel, a containment, safe. And now why this is going to work, they're telling us, is because there's sufficient amount of cracks in it to let the water get in there. So, right. I mean, so it's great that they're in there, but it's not really good news overall.
Thank you to all our guests, Ron Insana, Michael Farr, John Kudlow, David Kotok, Brian Kelly, and Jim Rogers. That's all for us tonight. Thanks so much for watching the CNBC Special Report.